traders, I'm Tamar Mayer and welcome to the Knockout Trader Dojo and our Market Unwrapped series. Now in this series I'm going to take a look at fundamental elements and their counterpart technical analysis to see how they all stack up and if we can uncover any hidden insight within the charts. So today I want to cover the everything rally. So is it going to crash? Are we about to see some fading of this strong rally, or is it really coming to a middle? So a couple of elements with this rally, a couple of interesting points. So first of all, the S&P 500 has had its best November, or second best November actually, since 1980. We've seen bond prices rising and we've seen their yield falling. We saw Bitcoin touching 42,000. Now that could also be because of the idea of the Bitcoin ETF or crypto ETF coming to the market. We also saw gold rally into all-time highs, although we saw yesterday after that strong push a really strong pullback coming through as well. But overall, gold has done, I believe, around 13 to 16% since October, so quite a strong rally in gold. And the market is pricing so very strongly that the Fed in the next 6 months is going to cut interest rate. Now, a couple of interesting elements about this pricing, about this belief. Yes, we've seen some really encouraging element, really encouraging numbers coming out saying that inflation is coming down. But on Friday, Fed Chair Jerome Powell tried to push against that market narrative and saying we are not clear that we are done yet, we are not certain that we actually defeated inflation. What's interesting was that according to the market, the world were not strong enough. So he didn't push strongly enough against the narrative of a rate coming down. The market sort of reacted to his words and then go, that's all right, we'll keep on rallying. And Friday was a strong rally as well. So there's this expectation in the market that that's it, finito, we finished, we beat inflation down and the party can start from now on. But there's a couple of more elements that comes into play. So let's think about what's coming in this very interesting week, and then we'll have a look at the live market and see that idea of what this strong rally has done, that really massive overextension. So this week we're going to see Jolt job opening, ADP on Wednesday. So today is the Jolt, Wednesday is the ADP. We're going to see initial jobless claim on Thursday, and of course the big heavy one, non-farm payroll on Friday. And all of those related to the employment market. So the mandate of the inflation may be coming down, but it's important also for the Fed to not see overheated economy. So the numbers that may come this week might give us a bit more clue on where we're going. But nevertheless, we have seen ever since the beginning of 2022, the market pricing in the next 6 months a rate cut. Now, nobody knows what's going to happen in the next 6 months. And if we look at the history of this pricing in and believing that the Fed is done, then we had that at the beginning of 2022 when they came. By the middle of 2022, we're going to see rate cuts, and all we saw was rate hikes. And then they went, it's going to be by the beginning of 2023 or at the end of 2022. And that didn't happen either. Then at 2023, they went in the middle of 2023. We're going to see the Fed has to cut the rate. And again, that didn't happen. And then we shift the dial to the end of 2023. That didn't happen either. So we're just shifting the dial again to the middle of 2024. Now, at some point, this idea will be correct. At some point, the Fed will cut rates. But what's going to happen until we get there? How are we going to get there? And is it indeed in 6 months? Well, I think history proven that nobody knows. Now, a couple of interesting elements about this idea, about this strong rally that happened in bonds. Well, what happened is that that's actually released some of the constraint of the financial conditions. So the rally in bonds actually is easing financial conditions, and that could bring on more inflation. So that is kind of like counterintuitive to this bond rally. So that may force the Fed to either hold rates higher for longer or even hike further. Now, another interesting point about this rally, or the rally in bonds, is that analysts point out that, and this is an interesting element, is that the easing of the financial condition can actually be akin to the Fed cutting rates. So if the market is already doing the Fed works for them, then are we actually going to see the Fed even more proceeding with a more easing of financial condition, given that labor market stays the same and there are no any unanticipated elements such as pandemic, which force central bank to ease financial conditions and drop the rates heavily and start quantitative easing again? So bar any events like that, if we're continuing the way we are, and the market in its rally actually releasing the strain or the constraint on the financial conditions, is the Fed going to continue doing that as well? It's another interesting question. So we've seen a really strong rally in stock market, in the bond market, in gold and silver. We've seen a strong sell-off of the US dollar. So we're going to take a look at a couple of interesting charts, and we're going to look at, for example, gold, US dollar index, where we're sitting in a big scheme of things on the US index market. And while not trying to predict a rate cut in the next 6 months, but what I want to do is see how this whole idea of strong rally, and there are still analysts that believe that December might bring volatility and some sort of, if not a pullback, then a strong sell-off. I want to see how it all relates to the technical analysis and this idea of a very strong overextension. So let's move into the charts. And I want to start with the S&P 500, and this is the monthly chart. And as we can see, we had a breakout level over here. We consolidated underneath this level, smaller and smaller candles until we broke higher. But this break, this push, couldn't take this previous swing high. It's a bit different to the NASDAQ, and we'll have a look at that. But so far on the S&P, this high as well couldn't break this previous high. So we've got this really strong November push that actually cleared 3 months of pullback, but we haven't yet been able to take this previous high. So if we'll get precise, the high that we reached here was 4607.22. And the high that we reached here so far was 4599.48. So still ever so slightly lower high. Of course, this could change. If we'll take a look on the weekly, we can see that strong bullish momentum that pushed the price higher. This is the beginning of this week, so anything and everything can happen, and this could change. But we already reacted to this high, to this 4600 round number. So we had this strong push that clear all these lower highs along the way. It's a strong bullish momentum, but I am expecting a bit of release of that momentum and a pullback. And an area that I like to see the pullback to is this previous touches. It's also around the 4400, so again a round number. This is the last place that the sellers were strong, were able to take off from the buyers and push the price lower before getting annihilated by the buyers as they push higher. So a bit of release of this buying pressure would be absolutely fantastic and could tie in quite nicely with potential fundamental news just in time for that ever expected Santa rally. The next one that I want to take a look at is the NASDAQ, and we'll see the NASDAQ, the differences between the NASDAQ and the S&P, and let's go to the monthly. So first of all, this push that happened after the consolidation, so from the breakout, actually did break this previous swing lower high, and the high that we printed in November, so that push that we had already cleared this move. So we took 1 month to clear these 3 months of a pullback. So again, quite a strong buying momentum, and what it does, it's again makes us overextended, so meaning there's quite a strong distance between where price action sits and its moving averages, and that's why I'm expecting a bit of a pullback. Now on the NASDAQ, 2 areas that I'm looking for a pullback. A more shallow pullback will be around here, the 15,600, and my preferred area for a pullback would be around this level, around the 15,300. It's also bring us back into the averages. So I like the NASDAQ, but one thing to be aware of is with this strong push, we're coming back up into sellers territory, so we might see more volatility coming in, and we might see more sellers want to join in, and that might be something that we'll need to keep an eye on if we're looking to trade and buy right into sellers territory. The next one that I want to take a look at is gold. Now, gold was quite interesting, and yesterday I want to take a look first of all on the daily. We basically showed up into this 2150, so this is the area that I'm looking at my fight card. You can see we sort of touched closer to it, but we haven't gone into it. It's a strong rejection of that move so far, so I'm still waiting on this one. But let's take a look quickly on the 1 hour on that particular move. So we can see it's a strong shoot in a very small period of time that got completely rejected, and we actually went lower than the origin of that move. But coming back into the idea of higher time frame movement, so we can see we pinged that high, so we broke this previous high and made another higher high on this market. And as I mentioned, this is still a higher low, so we looked at the detail in the gold fight card, so we are still overextended. It's a very, very strong move. So again, on the weekly we were very overextended, and we're currently in the midst of pulling back. So I'm still keeping an eye on this area, and I'm looking for potential entry, but once again, this strong rejection kind of put me a bit uneasy. I want to see commitment from the buyers that they're actually coming back around this level. And then I want to take a look at Bitcoin. Now, Bitcoin, with that strong move that we've seen, it's not just that everyday rally, the bond rally, the expectation of rate cut, and higher risk in the market, so risk on mod. It's also the anticipation of cryptocurrencies, ETFs. So that's also affect this movement. But I want to start here first with the monthly. Now on the monthly, we can see we're back into an uptrend, but we are massively overextended, and once again swimming into sellers territory. So again, I'm expecting a pullback. Even the weekly, that big move that we've seen is very overextended. The thing with overextension is first we need to see signs we're running out of momentum before we can look for that pullback. But anything around a pullback to the breakout level of 38 or even lower down here around the 34 will be an interesting area to look for potential setup. So once again, overextension at some point, at some reason, whatever the reason may be, we could see a pullback. We need that release of that strong buying pressure. And lastly, I want to take a look at the US dollar index. Now, US dollar index is quite interesting. We had here a downtrend, we had a lower low, and then we burst up into a higher high. We basically even cleared this level around the 10,500. We pushed above it, we held, we tried to hold before we broke lower. So if we'll take a look here at where we stopped, we actually stopped above this previous swing low. And if we'll see a break above, we could see a test of that 10,500 again. So taking a look closer into the daily chart, and we can see that we might start to see the beginning of a turn. So the level that I'm keeping an eye on is here around the 10,350. We already got a couple of touches at that area, and I'm looking for confirmation that the turn is indeed in place, keeping a close eye on that 10,500. So if and when I'll get a setup around here, I might need to be out before we come back into that level, because we can see we basically cleared that with a very strong sell-off candle. So as much as we held and held and held, we broke lower, we tried to go higher, couldn't go any higher, and then slam dunk. So once again, this could tie in quite nicely with the idea that maybe we're not going to see some rate cuts, and the US dollar might strengthen from the concept of higher for longer. And that could tie in quite nicely if we'll see strong numbers coming in from the employment numbers, so from initial jobless claim, from non-farm payroll. If we'll see still strength in the employment market, then we might see some buying coming back into the dollar index, into the US dollar, and we might see reversal and a break. So once again, all of these are nicely tied together, technical and fundamental, and I am expecting a pullback, but I'm not trying to predict that pullback. But a mistake that a lot of new traders are doing is actually trying to predict the pullback just based on the idea that it is overextended. So we actually need to wait for sign from the market that rolling over, that the pullback is starting, before jumping into that pullback. And also, if the pullback is over, we need to see sign that, let's say here, the buyers are returning into the market, so the turn is actually happening and it's not just a failed break. And as we've seen in the last couple of months in the Knockout Trader, it doesn't really matter if the market is rallying or we've seen some very strong sell-off. As long as we're not stuck in a range, in a very narrow range, as long as we're not just going sideways without clear direction, without a winner from the buyers or the sellers, then I'll keep on looking and hitting those knockouts. Happy knockouts, everyone! Bye for now.